right, what is going on, Discord and YouTube family, and welcome back to another edition of Market Review with me, T Hobbs. Today is Wednesday, October 4th, October 1st, 2025, year of our Lord, and we will be reviewing price action on the S&P 500 futures, the NASDAQ futures, and the Dow Jones futures. Every single day, we put out a pre-market plan as per usual. We go over that plan, we trade that plan, and then we review that plan, then we chart for the next day. This portion of the video is going to be covering the market review for the for the pre-market plan on the ES futures. So first and foremost, Wednesday, October the 1st is what we talked about in the Discord. It's the first day of the month. It's the first day of the new 3-month cycle, right? It's the end of the week, the middle of the week, and it's NFP week, right? So we had like a triple entendre there of reasons for the market to at least set the sentiment today, right? Whether that sentiment was going to be bearish or bullish, that's up for interpretation. That's up for how you view the market. The way we were viewing the market, we viewed it as all of this consolidation from Tuesday was going to lead us to the ultimate move, which was going to be the expansion to the upside. As long as we liquidated both sides, which we did, we ran the highs, then we came back down and ran the lows. It's time to get long, looking for this expansion up to the high. So what did we actually write on our pre-market plan? Again, I'll reiterate, we put out the pre-market plan every single day, an hour to an hour and a half beforehand. We review the pre-market plan 30 minutes before the market is open, and then I trade live inside of the Discord every single day. If you guys are interested in that and seeing how we view price, how I view price inside the Discord link is in the description down below. The price is $40 a month. By all means, join or just watch the reviews or the information if it helps you for free on YouTube. Otherwise, the prices will be going up next year. So just giving you a heads up. That being said, let's get right into it. Bullish retrace of a bearish liquidation, right? We had our bearish liquidation. Again, we talked about this on yesterday. We said, hey, this was the consolidation. Look for this to manipulate and then go higher. We were bullish as long as we stayed above. I put 67.43. What I really meant to put was 66.80. And then we were bearish as long as we stayed below 67.43, which, I mean, we stayed above here and we got above here. So there you go. Perfect workout. Macro, the bearish liquidation has found buyers at the 1-hour fair value gap. When we charted price yesterday, we talked about the S&P 500 having a very a nice little a nice little inefficiency, right? A nice little inefficiency down here, and the market closed that inside of London. When we saw that, I kind of view that as what I like to call the overnight chessboard low, right? Again, join the Discord if you don't know what the heck I'm talking about. But I call that the overnight chessboard low is what it turned into, and then we had our overnight chessboard high. So we had a bearish liquidation and buyers were found at the 1-hour fair value gap and now appear to be in a full reversal. Look to participate in the uptrend on the pullback of New York. Now, when I say pullback, that could also mean continuation, right? We could stop, pause, pull back slightly, and then we get the continuation higher. I said today is Wednesday and it is a trending day. Before we go into the rest of it, when we come into the market, I read this same thing to the Discord. I tell them, I said, I'm not going to tell you what to do because I never do. I don't like to do that. I'm going to tell you what I'm doing. If you're looking to short the market today, you might get one opportunity, and the rest of the day, I would not look to short this. And you look at these 4-hour candles, and I don't think, call me crazy, but I don't think there was many opportunities to short this market. But hey, do what you want. PM range, we were only looking for shorts here or here. But as I stated previously, today is Wednesday. I don't really think shorts are high probability at all if you don't get them right off the open. So what plan were we looking at? We were looking at here, overnight range. The important part of this range, important part of this plan is I write it the same way every day. This is literally copy and paste. I'm just changing the numbers. That should tell you something about what the market does every day. Anyway, the low, 66.91 through 66.80, which is this range here. The high, 67.1250 through 67.06. That's not the important part. The important part is what are we doing with that information? We want to look to short the high, which I've already identified, probably not a good idea today. Or we want to look to long the low, which I would love to do if the market came back here. Or we look for a BNR from HL. That can only mean a couple things if you're a trader. Break and retest from the high or low. So if we break to the downside, break and retest to go lower. We break to the upside, break and retest to go higher. That's how I was viewing price on the day. So let's drop into the lower time frames and get rid of the pre-market plan. And then we'll go over to the 5-minute and just, cover how price was delivered on the day. Now, I did not take a trade on the S&P 500. I actually took this same setup and trade idea on the NASDAQ. And I'll share with you that thesis when we move over to the NASDAQ as well. But when we came into the market, London brought the low. Obviously, the best place for me to take longs would have been if price came back down here and gave me that retest. It never did that. So now I have to develop a way to get long at the quote unquote high, understanding that this isn't going to be the high for long. This is going to be the consolidation area that the market taps back into after breaking it up. So what do we look for first? We look for a liquidation of the high, right, to trap the buyers and sellers at the same time. So they rally it up, right? If you were an early buyer, then you got paid, right? Like automatically got paid. This was easy money. But what did we do first? Based off our pre-market plan, we got the break above 67.17, right? And then we got the retest, right? Which is what we really wanted to see. So I'm trying to look for some music that's not getting on my nerve. Let's go with this. That sounds slower. There we go. So we got the break and the retest of the overnight chessboard low. This is what I'm talking about. Now it was an aggressive retest because we had 10 o'clock news. Like the market is going to move kind of crazy. But look at right at 10 o'clock. We tap right into the New York Open, right into True Day. This is the easy buy right here. And the market rallies where? Right into our chessboard high, gets above that. And then if this is the chessboard high, if you go back and look at the pre-market plan, what do? We look for a break and a retest of the chessboard high to go higher, targeting way up here. Why up here? Because we go over to the 4-hour, and this is the level we drew out for our ADR 2 days ago, right? It's still going to be the ADR. We just went down first to go get to it, right? So we're almost there. I mean, we're reaching about the 69s, and maybe we finish at the 73s. I think we can get there, right? And then that means that the market did the full pull. It just used this. It used Tuesday as a consolidation day to get ready for this movement here, right? So it was really nice, beautiful range, beautiful day of trading. Again, we were done. I think I was done in like the first 7 minutes of price. I'm gonna show you why over here on the NASDAQ. So the reason why I took the trade on the NASDAQ is just because honestly, ES went too fast. Like it just, and I don't really say that often about ES, like, but it developed really fast and I wasn't really ready for what it was gonna do. I wanted a sweep of this wick here, right? Like this 815 wick, and ES came within 50%. It came within the 50% and it moved very quickly. NQ came within the 50% and then dipped below the wick. And I was like, perfect, I'll take it on NQ. So I took it long. NQ, I got long 24.758. And then I trailed it up to these highs here. And I got out for like 65 points or something like that on NQ. And I was done for the day. Like before the market even printed the 10 o'clock candle, I was done. Shut it down. Right after that, the market liquidated, ran both of these lows again, trapping the sellers on the other side. This is a good short. This is the only short that was a good quality short, in my opinion. If you didn't take this short and you got caught trying to short this market all day, you were in for a world of trouble, because all we did was liquidate the lows on NQ. We came back to the weekly fib, back to 550.610 price, which is a portion of London's low, like the exchange of price there, right? Then we held this, put in a higher low here, right outside of 10 o'clock. We talked about this position or this particular trade live inside of the Discord. I discussed exactly how it was going to trap or how it was going to set up. And a lot of people made some money off the 10 o'clock candle. So I'm glad for that. We rally up. What's the first target? First target, weekly settlement. We talked about that in the Discord. The second target would have been monthly settlement right here at 24,902. You can see, although these are targets, look what the market's doing. It's blasting through these targets. So that's telling you what, even though we're getting pullbacks, we're in a strong uptrend. So the market is hitting these targets and getting some resistance, but it's blowing right through them because it's got a different target in mind. Our last target, again, was the ADR that we put up here on Monday or Tuesday. I think we put this up here. because we understood that the next movement would be a 1.09%, depending on how they deliver it, back up to these highs. So we're looking for NQ to finish at about 25,052 to roughly about 25,092. If it doesn't get there, fine, whatever. But that's what we would be targeting. So when we're getting long down here, right, you can hold the position, you can scalp the position, you can do whatever you want. Understand that if you re-enter this, you're not really buying the high anymore. When you get these little pullbacks, you're getting in on continuation, anticipating a rally much, much higher, right? So ultimately, NQ and ES played out the same. Let's take a look at the Dow Jones, right? Again, we look at the 5-minute time frame on the Dow Jones. We had the same exact setup basically on every instrument, but Dow Jones was the one that tipped his hat first, right? Every now and again, you'll get an instrument that just can't wait, right? It'll tip his hat inside of the pre-market. So what I'm looking for here is I don't really want to see price trade above this 730 true open 810 macro, give or take, right? If it does that, it's an indication that we're going higher. Well, right here at 9 o'clock, it peaked its head above it. And that's when I knew, I said, yep, if there was any doubt, right, that's when I knew that was the signal for me that we were going long, right? So when I didn't trade the Dow because I thought the Dow had less room to go than any of the other instruments, but we traded straight down into 930 or 925, popped down into 930, went straight up, liquidated right back down into 950. Right at 10 o'clock, we rallied back above, targeting these highs up here. And Dow still may get up there, but for now, it's continuation bullish. 1 o'clock is bringing the low of the day. 3 o'clock appears to be bringing the high. So I'm looking for higher prices rolling into Thursday, right? That's how I'm viewing the price action going into the day. Now, let's talk about the other instrument that I use as a confluence, right? Not necessarily a confluence, but it keeps me in line with what price is doing. And that's the volatility index. I talk about it on my top-down analysis. I talk about it in my market reviews. I talk about it with the Discord. As long as the VIX is staying in check, so to speak, as long as it's showing bearish activity or consolidatory activity, I'm going to continue to look for longs, i.e., as long as we stay between 18, we stay below 18 or 19, we should still remain bullish. The minute the VIX breaks this trend, right, and I keep telling everybody the same thing, whenever it breaks this trend, right, and it continues and it retests this trend line and holds it, or it sweeps into these lows, that's when I'll start to get a little bit more bearish on the market. But for now, they're doing a great job at just keeping the VIX in check, right? And as long as I see that every morning I wake up, I'm going to be looking to do the same thing every single day until the market shows me something different. Listen, that being said, ladies and gentlemen, I'm not going to hold you here too long. Today was really easy price action to read. Again, if you're struggling reading price action or if you just need some assistance along your journey, I've been there, done that. I've been unprofitable. I've been profitable, right? The goal is to try to remain consistent, right? I will never lie to you and tell you I know everything. I will never lie to you and tell you that I know exactly what the market is doing. What I will do, though, is I'll tell you what I'm anticipating and what I'm going to do if it does X, Y, and Z. And I'm going to teach you also how to do that. If that's something you're interested in, like I said, the Discord link is in the description down below. But for now, my name is T Hobbs. This is the Market Review. I'll catch you guys on the next one, man. Peace. All right. Okay.